important. So what we want to do today is share with you and compare some of we feel the top IULs in the marketplace and kind of break them down, put them under the microscope and take a look and see, the differences between them. We're not necessarily going to say which one is the best because they're all good. It just depends on which is the best for your specific client needs. And that's what we're going to do today. We're going to break down the living benefits, which we feel are super important when it comes to these products, and then go more into the numbers. So you'll see that with two different comparisons there. So let's get started. Let's take a look at National Life Group's IUL, American National's, Allianz's, and then the new one we've added recently to the portfolio, F&G. So when we break down living benefits, you'll see some differences and some similarities. What struck me when I was breaking these down, looking to see the difference between the National Life, American National, F&G, is that there's about half of them are different. When we talk about living benefits, it's important to really go into the details and mention to them what those benefits are, because it's not just all companies cover the same types of illnesses when it comes to critical illnesses or critical injuries. So as you can see here, we look at the National Life, American F&G, half the same with the ALS coverage, the cancer, the kidney, end-stage renal failure, the heart attack, organ transplant, stroke, paralysis, burns. And each company does a little bit differently. National Life calls it severe burns. American National calls it major burns. F&G calls it significant burns. Okay, I got this straight from the guidelines. And then blindness, National Life and American National have that coverage, but F&G does not. Versus ANICO and F&G have the central nervous aneurysms are the same, but National Life does not. And then you can see the differences here of what ANICO has to offer on the tumors, loss of limb, disease of organ, AIDS, and multi-system trauma. And then National Life, of course, has all of these down here. So the point of me showing you this is that I want you just to be aware of the slight differences between living benefits, because it's not all the same across the board. And that's what struck me initially when doing this research, is that I was expecting to be more similarities between all of them, and it's about half. I was expecting 2/3 or more. So whenever you're presenting these solutions to the clients, just make sure that you are aware that living benefits can be broken down to a bit more detail, because it is a little bit slightly different from company to company. Can't say that it's the same across the board. And we'll provide this for y'all for attendance. So you have copies of this as a good little breakdown, so you can see what's the same and different. So now what I want to do is I want to go a little deeper. I'm going to break this down and go into each different carrier and kind of show you more than just these living benefits, go into the terminal illness, the chronic illness, critical illness, and critical injury, and show you the amounts that each company covers, a little bit more detail into these. So for example, if we go into the National Life Group, you'll see that the terminal illness protection provides 24 months of life expectancy. In a minute, you'll see one of them only has 12 months. So it's one of the more generous ones when it comes to terminal illness across the board, even across the industry, which is good. And it provides the coverage up to $1.5 million. So that means if a client of yours has a policy that is less than 1.5, they can maximize that terminal illness coverage up to the amount of 1.5. If a client that has a life insurance policy that's 1.5 or more, say 2 million, 3 million, 5 million, the terminal illness only covers up to that 1.5. Still a very generous amount of coverage. When it comes to the chronic illness, you have to be unable to perform 2 out of 6 activities of daily living, or you're cognitively impaired. And this can be a temporary chronic illness. It doesn't have to be a permanent. You'll see in a moment, one of these companies requires a permanent chronic illness to provide this type of benefit. But with National Life, it doesn't have to be permanent. It can be temporary and provides coverage, again, up to that $1.5 million. And we go and break down the critical illness and the critical injury. I won't go into details. We just went over those. But you'll see that those coverages are up to the $1 million for each of those there, for the critical illness right here and the critical injury, $1 million right there as well. So again, of all the carriers, I would say, National Life has the most comprehensive coverage from a living benefits perspective. and their amounts are at the top, but not the top. The top coverage when it comes to living benefits payouts is going to be American National, but it comes with some slight differences. From a terminal illness perspective, it's equivalent to National Life at 24 months, but you'll see here it's up to $2 million versus the 1.5. So a little bit more coverage when it comes to living benefits here. But here's the main difference with the chronic illness. American National requires the chronic illness to be a permanent chronic illness, not a temporary. So that's a slight difference there when you look at that comparison, but does provide up to the $2 million of coverage there. And again, I won't go into details of the critical illness because we just went over those, but you'll see here that they provide also the $2 million up to that coverage. So I would say the most generous amounts comes with American National, but there are some slight differences. The permanent chronic illness and the critical illness is not as robust, but still very good when it compares to the National Life product. Again, you can't go wrong. They're all great products. Just depends which one makes sense for your clients. Next one is F&G in Allianz. F&G also provides a 24 months of life expectancy, but their coverage is only up to $1 million. It's a little bit less than National Life and American National. When a chronic illness, it can be temporary, again, only up to the $1 million. And then the critical illness is a little bit more reduced than what we saw with National Life, American National for the different coverages there. Again, only up to the $1 million. When it comes to Allianz, you'll see here the terminal illness is only 12 months. So half of what we just saw for National Life, American National, F&G, and only provide that up to $1 million. And that's it. That's the only living benefit that Allianz offers. You can add a chronic illness rider, but there's an extra cost versus the ones for F&G, American National, National Life are included as part of the package deal. Okay, so you're not paying an extra premium to have those added to those policies versus Allianz's. It is, but again, that's not why Allianz designed their product. You'll see in a minute. We go over where these products fit the specific clients is designed more for a cash accumulation solution, not so much a living benefit solution. Okay, so this is kind of the breakdown of all the living benefits, and you can see kind of the slight differences and similarities between them. It just depends on what's important to your clients as to which product you decide to present to them. All right, now we're getting into the nitty gritty. All right, I did two comparisons here. First, we have a 40-year-old, and then we have a 50-year-old. This was a 40-year-old male. I did a preferred non-tobacco rating at just $500 a month. I wanted to see what death benefit does it give us, what cash value does it give us, the target premium, the minimum premiums, what income at 65, and then the cost. And we're going to break all these down and take a look at them. I've highlighted where each one has the best number per category, and you'll see it's kind of all over the board. And you'll see they're slightly close to each other and not that far off when it comes to the numbers. So let's get into it. Look at the death benefit. The $500 a month with National Life buys $436,000 of death benefit, American National $489, Allianz $458, and F&G $480. So around the same. I mean, ANICOs, I think, and F&Gs are the closest to each other, over $480,000. National Life at the lowest when it comes to purchasing life insurance. Allianz kind of right in the middle. So if your client really wants death benefit, you kind of see where the winners are. You know, American National F&G buys the most life insurance for the $500 a month. However, if you want to balance cash value with death benefit, or cash value is more important for the client, you can see across the board here, National Life at $270, American National at $230, Allianz at $272, and F&G at $289. So F&G has the most cash value for a 40-year-old male at $500 a month versus these other carriers. So you can see National Life at $271 and Allianz are pretty close to each other, $271, $272 when it comes to cash value. But F&G has slightly more and costs slightly less. Now we look at the target premium. This is when we look at, what the optimal amount of money to put into the policy. You're looking at National Life being at $5,600, ANICO at $6,400, Allianz $57, and F&G is 6405. So American National and F&G are right in line when it comes to target premium, just $4 of difference there on the target. And then National Life and Allianz are right lower there, about $800 less there. Now, minimum premium. Minimum premium gives the client flexibility. If for some reason they can't make the full payment or something happens, and they want to just take a pause on maxing out the policy, a lot of carriers have flexibility and some don't. On National Life, there's way more flexibility. On the minimum premium side, you see they're the winner in this category at $2,600 a year. It's a little over $200 a month versus $500 a month. American National, slightly more, $3,500 a year, about $300 a month. Allianz is right in line with their target. With Allianz does not have a minimum premium option. Their minimum is pretty much in line with their target premium. So a client that wants flexibility in their premium payments, this might not be the solution for them because they have to make the same payment or potentially risk lapsing the policy. And F&G is about half of the target premium there, about $3,200. So if you want flexibility, you're looking at National Life, ANICO, and potentially F&G. Allianz does not have that option there. And if we want to look at income at 65, which is the purpose of how we design these policies, right, to supplement retirement income and get tax-free monies from these products, you'll see that they're pretty closely aligned. The National Life product will generate potentially $24,000, and it goes around 23, Allianz 25, and F&G around 26. So it's not a wide difference, maybe $1,000 or $2, difference when it looks at 65. Now that does compound over time. I mean, obviously people want more money than less, but again, as we generate these illustrations, they are proposals. So we really don't know how they will perform. We have a historical numbers to look at, but when you're illustrating the product, this is what you're going to see. So the slight edge goes to the F&G product, which makes sense given that their cash value tends to be the highest at the age of 65, which correlates with the income at 65. And I think an important piece that needs to be looked at as well is the cost. I mean, there is a cost to having these products, and obviously the lower the cost, the higher and better the products perform. So again, we break these costs down. I looked at the first 10 years because usually these products are designed on a 10-year surrender period. So the surrender fees are charged up front. And you'll see here that the National Life, the American National, and the F&G products have a 10-year surrender. The Allianz, unfortunately, has a 15-year surrender. I wanted to break down the 10 years so you kind of see that it is in line with these products from a 10-year perspective, but the Allianz product does have a 15-year surrender, so the costs are a little bit higher for a longer period of time. So that's something to take into consideration when you're presenting that solution. So at the end of the day, when you look at all the costs, the fees, the life of insurance, the expense fees, everything that gets added into the policy over 10 years, for National Life, it's going to be about $22,000. With American National, $24,000. With Allianz, if you look at the 15 years, $33,000. Then F&G, $23,000. So again, not that far off. $1,000 here or there, and $2,000 there, but it's not that significant of a difference when it comes to cost. But if you're really breaking it down number by number, National Life will have the lowest cost of having this policy for the first 10 years. But then after that, after they go over that 10-year hurdle, is where we start seeing exponential growth because those costs get cut down significantly. The surrender fees are pretty much eliminated from the policy, and then it has opportunity to grow a lot more. And that's where we see the acceleration of these policies. Okay, so here are the numbers comparing the 40-year-old putting $500 a month. Now we're going to do the same $500 a month for the next slide. Now we're looking at a 50-year-old at a standard rating. So instead of 40 at preferred, a 50 at standard. And then let's take a look at how these numbers look. Okay, so you're going to see numbers be a little bit more reduced because of the age difference and of course the health rating. Okay, so I try to be realistic with these numbers because this is where we see most of our clients land at this age bracket. A 50-year-old tends to land more standard than a 40-year-old at a preferred. So given that they're still spending the same amount of money, $500 a month, it's obvious to see that the death benefit will be a lot less. right? You'd be able to buy less life insurance given that you're older and at a lower health class. So death benefit wise, again, American National becomes a leader in this realm at $308,000 of purchasing life insurance versus National Life at $271, Allianz $281, and F&G at $297. So second place is, about $10,000 difference there when it comes to life insurance being purchased. And then what I do with the cash value on this one here, I push it to age 70. I figure, if that person is starting a little bit later in life, they have to wait a little bit longer to get their money versus 65. Again, that's realistic. That's how we run our proposals with our clients, showing, at least 20 years of accumulation, I think is important to show in these products. So you'll see here that at these older ages, you're going to have National Life being the winner of the cash value versus previously at the younger age, I believe it was F&G had the higher cash value. Again, not much of a difference, only about $3,000 of difference there on the cash value at age 70. And then, of course, ANICO at 136 and Allianz at 156. So slightly less cash value at this time frame. From a target perspective, they're all pretty much close in line, around $6,000, which goes in line with the $500 a month. American National has slightly higher, $6,900, and then F&G will win there at the $7,000 target premium for this policy here of our 50-year-old. And then go back to the minimums. Okay, again, the leader on this would be National Life. National Life has the most flexibility when it comes to minimum premiums, $100 a year, around $240 a month is the minimum there. American National at $4,000. Allianz, again, right in line with the target. So not much flexibility when it comes to the target premium, the minimum premium. So if a client wants to drop their payments, there's not much wiggle room there. They have to maintain that monthly payment there. And F&G, again, about half of what the target premium was, $3,500. So again, National Life kind of wins, if you will, when it comes to premiums, minimum premium. And then income. We're going to calculate income at this point and show what it would look like if they wanted to, have a supplemental retirement income for tax-free money. Very close, I would say, with National Life at $14,108 and Allianz at $14,260, and F&G at $13,700, and ANICO comes in lower there at $12,519. Again, slight differences, but not too much to say, oh my gosh, this one's a clear winner. And then the 10-year costs. Again, I want to break these down and kind of show how much it costs to have these policies in the first 10 years. Again, since it is an older client at a lesser health rating, so the costs tend to go a little bit higher than they were before, $2,600, which makes sense given that the cash value is higher because you're paying for less cost of insurance and cost of the fees. And then we have American National and F&G at the $27,000, so slightly more than National Life, but not too much. And then of course we have Allianz with their 15-year surrender. It's $39,000 is the fees having that policy in place. And then if we break it down for 10 years, it's right in line with everybody else. But Allianz has that 15 surrender, so we can't ignore that. So you can see there's not one clear winner across the board, okay? Some have better on death benefits, some have better on cash value, some have better on target premium, minimum, income, 10-year cost. It's all across the board. What really matters is what's important to your client so you can direct them and point them to the right solution for them, okay? So now what I want to do is I want to show you where these products work as to what the client wants, okay? So we're going to take a look and see why National Life and where do we place the business? Well, we use National Life whenever somebody wants the best living benefits. I think that's important to mention because they have, I guess, the most robust living benefits that we saw when compared in our charts. So if they want the best, National Life wins in that category. I would say somebody who wants flexible premium payments, as we saw on the chart there, they tend to have the most flexibility on the minimum and the target premium. So it gives you more options if for some reason something happens in life and I drop down my payment to half what I was paying. You can probably do that with National Life more so than some of the other carriers. Cash value is good. Sometimes it's the best, sometimes it's not, but it's good. It's up there with the top performers. So it wants good cash value and somebody who wants the low cost. I think we saw National Life had the lowest cost on both those 40 and 50-year-olds to look and see to get the most bang for your buck, if you will, when it comes to to these policies. So if somebody wants these things in an IUL, National Life is the product to go to. Now, why American National? Well, I'd say American National is the one who probably has one of the easier underwritings in my experience, given these 4 carriers, more flexible, willing to work with you. And then somebody who cares more about death benefits. Right? I want to make sure that I'm protecting my family and get the most bang for my buck when it comes to life insurance purchasing. American National, I think, won on both, the 50 and 40-year-old. So death benefit definitely is a driver on this solution. And I'm not saying that cash value is not important, but death benefit is the primary reason they want this, the IUL, and it goes the way to go. And then if you want better returns, you can do that with American National, but you have to pay the multiplier costs. So something we've talked about in our previous webinars is how these insurance companies are offering different type of indexing strategies with multipliers here. It's important that to note that they're there. There's just a fee to use them to kind of get that performance. So American National offers those within their solution. Kind of has to be willing to pay for those to get those types of returns. Why Allianz? Well, Allianz has always pushed for the business owner, right? They're the ones that use it for the cash value, not so much living benefits and the potential income. So on this one, we saw it perform on par with all the other carriers for the 40-year-old. I would say where it won was when you get into the older 50-year-old range, where we saw it get a little bit more income for that person at 70 years old. And they're also designed for what they call the Henry client, which is the high earner, but not rich yet type client. So somebody who's a bit younger, who really wants the cash accumulation, maybe living benefits is not as important to them. They just want to really max out this policy, and the minimums is not as important to them, but they're going to max fund it from day one. Allianz is the way to go. And also what's nice about Allianz is since they do all of their indexing in-house, they don't go to Wall Street and sweep on a monthly basis for indexing strategies. They do it on a daily basis. And that's important for them to get more performance out of their IUL policy. I would say Allianz is the way to go when it comes to performance-driven, more indexing strategy options, kind of mixing and matching, because Allianz kind of owns that within their own business unit versus exporting that out to third parties. And then finally, F&G. F&G, it has some of the highest caps right now. 13.5% is what they have on their S&P 500, and they have high participation rates. They have one strategy that has 190% participation. Okay, so they have high caps, high participation rates. If that's important to the client to get performance out of their policy, I think F&G is the way to go. They have a great partnership with Blackstone, which is one of the premier Wall Street companies out there that helps them with their indexing strategies. So they're always looking to push the envelope on performance. I think F&G is the route to go. And not only that, but they perform well when it comes to income and cash values. We saw they were never the top, but they're right slightly below. So it's not like they did bad; they did really good. They're just not the best at times. But with that strategy of partnering with Blackstone, that's important to some people to have somebody else kind of handle that for them, who knows what they're doing when it comes to the investing side of the business. F&G is the person to go. And you have, the living benefits are good. Not the best, not the worst, right in the middle. So those provide those living benefit protection for the client. So kind of a mix of both, kind of right in the middle, really good performer when it comes to the IULs. So you can see there's really no wrong way or best way when it comes to these products. It's what's best for the client and what's important. That's why we always talk about when we do these presentations, or if you've been with us on the webinars, how it's so important to the CFNA. Well, having a really good CFNA, it kind of directs you as to which product you need to present to your clients. Okay, living benefits, National Life. More death benefit, American National. I want some cash value, wiggle living benefits, National Life F&G. Well, hey, all I care about is growth in my policy. I don't not so much care about living benefits, Allianz. Okay, so the CFNA drives which product you're going to present to your clients. Okay. That's why we want to go over these top 4 IULs, because they're all good. It just depends, are they good for that client you're talking to today? Because it could be different to the one you're talking to tomorrow, okay? So that's why I want to go over these presentations today, kind of comparing these IULs. So you kind of see the differences as to why they're all good. It just matters of what's important to your client as to which one you present to them. So that concludes the webinar today, comparing the IULs.